What's going on, traders? Today I want to talk about trade plans, the importance of trade plans. And a lot of you guys probably know what a trade plan is, maybe how to build it, but we have a lot of newer traders here in the free group that are still learning the skills of trading and how to build trade plans in the first place and the importance of trade plans. And I think my trade today was a perfect testament of just that. Understanding where are we taking trades and why, to make sure that the trades that we take have the highest odds of working in our favor. Understanding where stops go simply based on where is this trade invalid, and always being able to look left to get an idea of, hey, where is the best area to take profit? I mean, ask yourself this question. How many times have you taken a trade? You've been in the trade. It's green. It's going well. And then boom, in the blink of an eye, you're down. In the blink of an eye, you've given back all those profits. In the blink of an eye, you don't know what the heck happened. And that simply is due to the fact that you're not building trade plans, or you're not building proper trade plans. And again, maybe you're being a little too greedy, asking for too much out of the trade, and there's better areas to take profit. Maybe your stops are just way too far away, and you could tighten those up strategically based on where the trade is invalid. So I just want to stress the importance of the trade plans, and I want to really walk you through my process that I created on building trade plans. So it's simple, it's easy, you know how to do this, and you guys can start to, again, make some good profits, not be up $400, and then in the blink of an eye, be red. And I knew exactly where I wanted to get in and why. I knew where this trade was invalid based on the setup. And simply by looking left, I have an idea of where the most realistic area is to take profit. So when I have this plan built, I can get positioned correctly. I know how many contracts I want to take. I know how much I'm losing. I know how much I'm making. I have the ability to accept that outcome ahead of time. So when I'm in the trade, I don't got to look at my P&L. All I need to do is manage the trade properly. And just like that, trading can be so much easier for you. So let me go ahead and walk you through my little methodology, what I created to building trade plans, what I call the 3 A's. All right, the 3 A's. And so the first A, because again, we're talking the 3 A's. The first A is going to be analyze. Okay, analyze. The second A is going to be assess. Okay, and the third A is going to be accept. And this is what you do to build a plan. You analyze what you're looking at. You analyze the charts. All right, what do we have? Do we have key daily zones we're sitting at? What confluences do we have? What's the strategy? What's the setup? Analyze everything about what you see and the potential trade that you see developing. Because if you can analyze that trade correctly, it's going to make it so much easier to make your assessments. You're going to be able to assess where is my entry and why based on all the analysis you've done. You'll be able to understand the setup, the probabilities. You'll have expectations based on what you're seeing. So now it's going to be easier to assess where does my stop loss go based on where is this unique trade now invalid. And then you'll be able to look left and assess targets. Every trade's different. Every trade has a unique entry point. Every trade has a unique stop and a unique target. We're not able to do a proper assessment on those things if we don't first analyze the setup and understand the setup. Okay, so first is analyze the crap out of the market, out of the stock. Analyze the type of setup that you're seeing. In this case, it's a simple higher low break of the downtrend. And so we see intraday, the SPY on a 5-minute time frame, we are building a higher low. And not just a random higher low at a random level, right? We are building a higher low off of a key daily support zone. That's the bottom of this daily gap that we're currently trading inside of. So I know that 620.46 is the bottom of the daily gap, which is a nice support level, okay? And I start to see that we are developing a higher low off that level. And I also see that we've been stuck underneath of this multi-day downtrend again since last Thursday. Last Thursday's high, build a lower high pre-market on Monday. We validate it this morning for a 0.3, 0.4, 0.5, 0.6, 0.7. So, I mean, we've smacked that downtrend 7 times, and we're respecting it as resistance. We try to break it, we fail. We try to break it, we fail. We come up and try to break it, we fail. But what do we know about downtrends? Downtrends like to be broken when price moves into that downtrend off of a higher low, but that higher low has to form at a key support level. So I'm able to understand all of this because I am analyzing the crap out of the SPY. I see that we're building a higher low off of a key daily support level coming back up into that downtrend. So I know most of the time when we see this type of setup and this type of development, we get the break of the downtrend. And that's where buyers rush in and you see nice pops and nice moves to the upside. Awesome. So I know where I would like to see a higher low form prior to it getting to the downtrend to break in the first place. Again, the bottom of that daily gap. But I still want, again, to analyze what other confluences do I have? Can I run a fib retracement here, right, to see if I have a confluence with that fib retracement, right? Do I have anything else? Well, in this scenario, I did. We have a nice 5-minute basing candle, right? This is a nice little intraday 5-minute demand candle where we see price rally, base, rally. And the nice thing about this next little impulsive move to the upside is we broke that prior lower high. The impulse was 2 times greater out. That candle body was definitely less than 50% of the candle's entire range. So we've identified we have a proper 5-minute demand candle. And we can utilize that as confluence. And so what do you notice? Right? That 5-minute demand candle just so happens to line up with the bottom of the daily gap, that support level at 620.46. And we do see a proper leg to the upside. Higher low, higher high. So we could even take a fib retracement from this swing low, drag it up to this swing high. And then what do we see? Wow, surprising. Not only do we have the bottom of the gap, daily support level, not only do we have this intraday 5-minute demand candle where we could see price react off of, right? We even have a nice 50% retracement level to see if we get the second leg to the upside. We validated this is a proper first leg up. We know we can run a fib retracement on it. Typically, stocks like to pull back to that 50% level before seeing the second leg to the upside. And I pair all of this with the simple fact that we're putting in a higher low at an area where we have multiple confluences, and I know that we would see that higher low push back to the downtrend, and about 70 to 80% of the time when we get to that downtrend on that higher low, boop, we get a nice break to the upside. So I know this is an 80-20 A-plus setup. Why do I know this is an 80-20 A-plus setup? Because I have done all of my analysis. I've analyzed the shit out of this trade. So first A was complete. First A was done. And I understand what the strategy is. Again, higher low break of the downtrend of 0.4. I don't have fancy names about my strategies. I just say it how it is. What's it doing? Putting in a higher low for a break of the downtrend. That simple. I've analyzed it. That's going to make it so much easier for me to go do my assessment. Now, what am I assessing? There's four to five things I'm assessing. All right. Number one, where's my entry and why? Well, I know where my entry is going to be at. It's going to be where all of my confluences meet. So where do all of my confluences meet? Well, I have the bottom of the daily gap support. I have the 50% retracement, right? I even have this little 5-minute demand candle. So all three of my confluences meet right here at the same price point. So I'm able to assess my entry, and I know where my entry is and why. And that is a high probability area to enter. Now that I know the setup that I'm trading, a higher low break of that downturn off key support, I know where the trade is invalid. So now I know strategically where I can place my stops. So on this type of trade, where is my trade invalid? Where should stops go? Well, if we do not push off that higher low, off all of that support, I know that if we fall below that 5-minute basing candle, I know that if we fall below that support level, I know if we fall below this fib level right here, the 618, this trade is dead. This trade is invalid. The probabilities of this trade still pushing to the upside are very slim. So I know where the trade is invalid. It is going to be underneath all of that support, underneath that 618 fib retracement, right? So I know where my entry is and why. And I keep putting my entry here because I didn't nail it right when it got there. My entry was a little bit late, but my risk reward was still intact, so I still took the trade. But my entry initially, I was looking for this 620.50, where all of those confluences overlapped. And I knew my stop was going to be below that 618, below the gap level, below that 5-minute demand candle, because that is where this unique trade is invalid. So what was my risk? 22 cents initially. Obviously, I got in a little bit higher, so my risk is about 35 cents. But again, my risk reward was still intact. It made sense to take the trade. So I'm able to assess my entry based on my confluences. I'm able to assess my stop based on where this trade is invalid. And now that I know the trade, I'm able to have some expectations. What are my expectations with this higher low break of the downtrend? That we break the downtrend, we see buyers rush into our next resistance level. So look left. Where is my next resistance level going to be? Well, we have a lot of resistance up against these pre-market highs, right? We hit it, we drop. Pre-market high level, we drop. Come back up for the third time. We hit it, we drop. So I know that if we get the break, buyers move in, we are going to run up into our next resistance level before we see some profit taking and see a drop on off. So I now know where I want to take profit on this trade. I've assessed my target. Now I have all of the information that I need to go ahead and assess how many contracts should I take, right? And it just comes down to my risk parameters, okay? So let's start with calculating risk reward on an option because that's very important. I trade 40 delta options. So the option that I was trading was a 622 call. And at that point in time, the delta was a 40. I shop a consistent delta. I trade a 40 delta on the SPY and the Qs. And now that I know what the delta is, I can look at my risk and reward based on the SPY's chart to calculate what is my risk per contract. Okay, so the way that we break this down is I like to break it down into tenths. Okay, so stay with me here. What's 1/10 of a dollar? It's 10 cents. What's 1/10 of a 40 delta? $4. So I know for every 10 cents of movement on the SPY, my option will go up or down by $4, right? That's the formula. That's the calculation. So now that I know what 1/10 is, okay, what am I risking? 35 cents. So that's 3.5 tenths. Something like that, right? But I know it's not quite 40 cents, right? If my risk on this trade was 40 cents, that's 4/10 of a dollar. What's 4/10 of my delta? Well, it's going to be, 4 times 4 is 16. So I knew that on this trade, I was risking no more, right, than $16 per contract. I now know what my risk is per contract, right? And that's going to help me assess how many contracts I want to take in the first place. Again, follow along. This will make sense, right? And then the reward's easy. What's my reward on the trade? I'm looking to get 3x my risk, right? Simple. 3x my risk. So I know that on this trade, if I'm right, I'm going to get about $48 per contract reward, right? About 48 bucks. 16, right? Per contract is my risk, but I'm getting 3 times my risk reward. So 16 times 3, I'm pretty sure is 48 bucks. It's probably 47 bucks. Again, math is not my strong suit. 16, 3, 48. I am good at math. Yeah. So I already knew that per contract, right? I was going to lose 16 bucks a contract to make $48 a contract. Then it really just comes down to what is my risk parameter, right? How much can I lose on this trade? Well, I I was going to do low risk. But either way, we'll talk about this in the next lesson, doing risk parameters 1%, 2%, 3%. I don't want to confuse you guys. But again, this is how we look to get positioned based on those risk parameters. But I wasn't willing to lose more than $160 on the trade, right? That's what I fully accepted. On this trade, I'm cool with losing 160, and I know I can get 3x my risk, which would be 480. So now I know how many contracts I can take on this trade. I can assess my position sizing, right? So if I'm not willing to lose more than $160, how many contracts can I trade? 10, right? 10 contracts at $16 of risk per contract is 160. And I know that, hey, if I hit my target, I have the potential to make 480. Okay, so I've assessed my entry and why, my stop and why, my target and why. Right? I'm even able to now assess, based on doing that calculation, assess how many contracts can I take on this trade to not lose a certain amount of money. Okay, and I come to the conclusion of negative 160 risk, 480 profit. That's 10 contracts. I've assessed my position size. The final A is accept, and that is the most important step of this, is accept the outcome, guys. Accept it. If you get down to this part here, and you're like, dude, risking $160? That's too much. Maybe that's 5% of your account. You can't risk more than 3% of your account, but maybe that's 5%. You know you can't take 10 contracts on this trade. You would need to size down a little bit. Or let's say that, it's a good setup, but I'm not really willing to risk 160 on this B setup. If it was a B setup, it gives you the option to go ahead and reduce your size if you can't accept losing 160 on this trade if you're wrong. It gives you the opportunity to adjust your position sizing. So if you get to the acceptance part and you can't accept it, we can drop our size down. Let's say you're only willing to lose $80. Well, that's half of the 160 calculation we did. So that means on this trade, you would only take 5 contracts to lose 80, but to still get 3 times your risk, which would be 240. Can you accept that outcome? Okay, when you can fully accept the outcome and you're like, yeah, I'm cool with losing $80 to make 240, guess what's not going to happen if you get stopped out and lose $80? You're not going to be emotional. You're not going to be frustrated, right? It's not going to phase you. You already accepted, I'm cool with losing $80. If you hit target and you make your 240, guess what? You're not overly confident. You're not cocky. You're not on top of the world, the best trader ever, to where you're going to go out there and fucking probably give it back. You're completely numb to the emotions of trading. And that's the beautiful thing about following those 3 A's, is so much clarity, right? As far as what's the outcome going to be. And you have the opportunity to accept that outcome knowing that, hey, I'm going to be completely numb and neutral to any kind of emotions that could come after executing this trade. And that's something that we have to learn to do as traders, is regulate and control our emotions. And this makes it so much easier to do that by accepting it. So I accepted that reality. I was A-okay with risking 160 to make 480 on this trade because I know it's an A-fucking-plus trade. I have multiple confluences. The setup's there. I've analyzed the crap out of it. I'm convicted. I'm confident. I've assessed everything I need to assess, and I'm accepting it. I'm okay with this outcome if that's what were to happen. So guess what? I'm not hesitating on my entries. I'm not holding my losses too long. I'm not getting into the trade and not taking profit just to be up $480 to give it all back in the blink of an eye. I know exactly how I need to manage this trade. I know exactly what my expectations are. I know exactly what I need to do. So all I have to do is just do it. It makes it so much easier to take a trade. And that alone removes so many of those emotions that a lot of you guys could be struggling with. I get it. I mean, I struggled with my emotions for 3 years. And for those 3 years, I lost a lot of money, guys. So I know how important it is to get those emotions in check. And this process really helps you do that. And so just like that, I knew my entry, stop, target. I knew my size. I wasn't fearful. I didn't hesitate to take the trade. I got in knowing what the outcome was going to be. And now I'm at the mercy of the market. I'm just going to let the market do its thing. I don't know what the outcome is going to be. I don't know what the outcome is going to be. Is this one unique trade going to stop me out? I don't know. But I know if I take this same trade 100 times, I know 70% of the time this trade's going to work. So I don't care about the outcome of this one trade, whether it's a winner or a loser. I care about what's my outcome over 100 of these trades. to make sure that if I were to take 100 of these trades, what's my hit rate? What's my win percentage? I know it's well above 70%. So regardless of what this outcome is, I'm going to take this trade 100 times just like this flawlessly, knowing that I am going to make money, especially when I'm banging out 3-to-1 risk-reward ratios at a 70% win percentage. This is a profitable strategy. This is a profitable trading system, right? So I was okay with the outcome, and just like that, remove the emotions, no fear, no hesitation, no greed, looking for more. I'm not even looking at my P&L. That's the cool thing too. I don't need to look at my P&L because I know what the outcome is. And just like that, after commissions and fees, I got $440. Wow. Pretty close to that 480 calculation I did on the option. So I was really damn close on what the outcome was going to be regarding risk reward. And that's the nice thing, is now I don't even need to look at the P&L. I just need to manage the trade, right? And again, execute based on my plan flawlessly. So I knew I gave a lot to you guys just there, but this stuff is really, really important. And you can see this is a multifaceted approach, right? This is going to help you gain clarity. You're going to be able to get positioned correctly. You're going to be able to remove the emotions. You'll stop managing your P&L and start managing the trade. And this will help you guys tremendously if you just dial these 3 steps in, dial in the process of building really good plans. You're going to notice a tremendous change with the results in your trading if you take this stuff seriously. All right. So again, hopefully you guys enjoyed this. Hopefully there were some key takeaways for you. If you guys want me to make more videos like this in the future, let me know. I want to support you guys and help you guys out, become a lot better traders. If you guys do have any questions whatsoever, go ahead and drop those below this video. I'm going to reach back out to you guys and help you gain more understanding and bridge any gap that currently exists with the process of building trade plans with the 3 A's. As always, stay blessed and happy and safe trading.